everyone. We are going live on YouTube. Countdown. This is T Gresh Realty. Welcome to another episode with yours truly. We are going live. All right, so I can definitely be heard. All right, I am going to go ahead and share this. So maybe if someone wants to come on, they can. We are definitely live right now on our platforms. So I'm just sharing the link for anybody that would like to join. We are on here a little late, so I do apologize. I've been extremely busy today and I got in the house later than expected. All right. But that is not going to stop what's going on, and we're going to keep moving forward. All right. So thank you everybody that has joined me. My apologies if this video footage or this if this webcam is not the best. I'm using the one that comes straight out of the laptop, and I'm actually trying to see if I can find myself on my YouTube channel as well to make sure that I am showing up. Because a lot of times when I do these, for some reason, I can't find myself, and I just want to make sure that I populate. I think I'm on here somewhere, I don't know. But anyway, maybe it'll show up one day. With that being said, everyone, I hope you all have been having a great week. Today is Wednesday. Heute is Mittwoch. Today is Wednesday. Today we're going to be talking about the difference between homeowners insurance, uh, home, let me see here. We have mortgage insurance, homeowners insurance, and home warranties. My apologies, y'all. I'm a little tired, as you probably can tell. So I actually want to play a video that I saw, and I think this video is very prevalent because we don't want people having what's called buyer's remorse. Okay. What is buyer's remorse? Basically regretting your home purchase. And why are we regretting this? Because we were not properly educated, we were not properly prepared. Okay, so we want to avoid that. Now I'm gonna go try to find this video. I should have had the link already pulled up, y'all. But I think I found it. I think I found it already. Let's see. Here it is. Okay. So I did find the link. I am going to play this and I'm going to share this. All right, so just a moment, you all. I have to go ahead and get this pulled up so that it will play on the screen for you all. So just a moment. All right. Okay. All right, and sharing. So let's see here. Going to make this a little bit bigger. All right, so let's go ahead and play it, and I hope you all can hear this. Let's push play.
What's up, Grateful Gang? So after touring an apartment, I'm now considering whether I should sell my house.
Okay, we're not going to get into all of that. Let's skip over a little bit of this.
Y'all are such good help and support. Should I sell my house? So y'all know that from day one. When I bought this house, if you've been here for a while, within like 1 to 3 months, the ceiling was leaking, the toilet was overflowing, the sink was clogged up, the dishwasher stopped working, and there was water coming through the ceiling and the AC froze up. And this wasn't like a year in. This wasn't like, um, you know, we've been here for a while. We've been doing it. It just happened. And then in a couple years in, the water heater broke. And yeah, it goes on, the list goes on and on.
Okay, let's stop right there for a second, all right? Let's stop right there for a second and let's rewind what she said, okay?
Through the ceiling and the AC.
Let's keep going
Good.
back.
such good help and support. Should I sell my house? So, y'all know that from day one. When I bought this house, if you've been here for a while, within like 1 to 3 months, the ceiling was leaking, the toilet was overflowing, the sink was clogged up. The
Hold on. I got to make a list here of these home repairs, you all. She said the ceiling, hold on. The ceiling was leaking. The toilet clogged up. What else did she say, you all? I got to rewind it back because I'm tired tonight. Oops. I don't even know what just happened. Sorry about that, y'all. Hold on. Let me see if I can. Hold on. I got to stop sharing for a second. I'm going to try to get this pulled up one more time. I don't know what just happened. As I was playing the video, it just switched over to something else. Hold on one second, okay? We're going to get it put back up here. All right. I think my finger slipped. Okay. Share. All right. I think we got her back up here. Let's hear what else she was saying.
good, such good help and support. Should I sell my house? So, y'all know that from day one. When I bought this house, if you've been here for a while, within like 1 to 3 months, the ceiling was leaking, the toilet was overflowing, the sink was clogged up, the dishwasher stopped working, and there was water coming through the ceiling and the AC froze up. And this wasn't like a year in. This wasn't like, um, you know, we've been here for a while. We've been doing it. It just happened. And then in a couple years in, the water heater broke. And yeah, it goes on, the list goes on and on and on for maintenance. So as I went through this apartment looking for a friend, because that's why I really was there when my friends, Lauren, my girl Lauren, she's looking to move out. And
Okay, I'm going to stop right here, y'all, because I think this is the most important part to address. So, as you can see, the title of this video talks about home warranty. Okay. It talks about homeowners insurance. Okay. And it talks about mortgage insurance. These are different. So I don't want you to think these are the same because they're not. The reason that I am making a list and I am actually checking it twice because I want to find out who's naughty or nice. No, but seriously. So she named 1, 2, 3, 4, 5, 6. She named 7 things, right? She said that her ceiling was leaking, and she stated that all of this happened within 1 to 3 months, and then she mentioned within a year. So I'm not sure which one it was, but within 1 to 3 months, I don't understand why she was going through all these issues. Um, because there should have been a home inspection that should have taken place prior to purchasing the property. More than likely, I would think that she had a home inspection done on the property. It sounds like this was not new construction. Sounds like this was a pre-built home. Doesn't really matter. But let's get into it, okay? The ceiling leaking. Why was the ceiling leaking? All right. We need to find out the answer to that question because during a home inspection, which is something that you would actually have done before purchasing the home, all right, unless you want to waive the inspection. And technically, you can waive the inspection in the state of North Carolina. In fact, a lot of investors don't sometimes they will waive the inspection and they'll purchase in cash because they already have a mindset to go in and invest a certain amount of money into the home to flip it. But for most regular home buyers, especially if you're a first-time home buyer, you're going to get an inspection. And not necessarily having to be a first-time home buyer if you're making this your primary residence or if you are purchasing in some form, shape, or capacity, more than likely you're going to have a home inspection because it's just like I said in my prior video, it's just like buying a used car. If you buy a used car, they say that you should ultimately have a mechanic to inspect it before purchasing, right? To double check to see before you make this major purchase if there are any issues that you should look out for. Same thing with a house. This is why you want to have $300 to $500 put to the side for a home inspection. All right. So the inspector is going to check for leaks in the ceiling, and that's something that you can actually inspect when you go into the residence to see if you see like any water prints in the ceiling and the cracks and crevices. Those are things you're going to look for. Turn the water on, hot water, cold water, make sure the hot water heater is working, making sure the water is getting hot like it's supposed to. She mentioned the dishwasher. Okay, that's an appliance. And who knows what the age of the dishwasher was prior to her taking on ownership of the home. All right, so that's something else to be mindful of. The sink got clogged. Now, why was the sink clogged? This could potentially be a plumbing issue, or it could be a matter of getting like Drano Plus or basically the garbage disposal. And that can be turned. There's like a little Allen wrench underneath. You can actually do that to unclog the sink. So I don't know which sink got clogged. I'm not sure if this was the kitchen sink or the bathroom sink. She said the toilet overflooded. I don't know if there's a reason that the toilet overflooded because you can actually overstuff it and that can cause this to happen. And then she said the air conditioner froze up. Now, why did this take place? If you don't change your air filters, everyone, okay, because they do this for you in a rental property. But if you don't regularly change your air filters, your air conditioner can seize up and freeze up, right? Causing chunks of ice to get clogged up. She said there was water in the ceiling. I would suggest that because of the leaking ceiling, there would be water in the ceiling. The reason as to why, I don't know. This could have been a plumbing issue or it could potentially be a roof issue. However, if there was a home inspector present, these are things that should have been put on the list. And then lastly, she said the water heater broke. Now, water heaters can go out, but this is why it's important for your realtor to review the residential property owner's disclosure statement with you. Remember, we spoke about this in the prior video. It's called the R pose, right? So in that, it's going to stipulate how old is that HVAC system. Now, this is something that the owner may not be privy to. If they're not the only, the first, if they're not the original owner, they might not know how long that HVAC system has been there. However, you can actually look at the HVAC system and there is a manufacturer date on that HVAC system and it tells you when it was manufactured. And the water heater is also something that should be addressed by the inspector. So my question is, were these things listed on the inspection report? Was there anything that should have been addressed in negotiations with her realtor and the listing agent that negated to be addressed? I'm not really sure what went on in her transaction. Now that we've addressed these things, okay, because really it's six things. If you have a leaking ceiling, there's going to be water in the ceiling. So it's really six things instead of seven. I want to talk about how the home warranty comes into play, you all. Because I did comment in her comment section and I did ask her, did she have a home warranty? And she claims that the lender, okay, provided her a home warranty at closing. And I really kind of questioned those sentiments to find out, did she understand what was going on in the transaction? And the reason I'm saying that is simply because the seller normally can gift you a home warranty in the transaction for up to a year if they choose to do so, or you could be advised by your realtor to purchase your own home warranty prior to closing, just so that these items and issues on this list are covered. So a home warranty covers things such as appliances, which would include your dishwasher, because she did speak about the dishwasher breaking and or not working. So that is something that could potentially be covered under her home warranty. Okay. The air conditioner freezing up. That is something that could be potentially covered under her home warranty. All right. Um, Water heater broke. This is another thing, another item that could have been covered under her home warranty, right? Toilet over flooded or clogged or whatever have you, sink clogged and plumbing. I think those are things that could be addressed by a handyman, okay? But the big ticket items is what I'm speaking about here on this list, which would include that water heater, okay? Because that's going to be quite costly. The leaking ceiling does give me pause and does give me concern because why is that going on shortly after she moved in? I am wondering what went on with that inspection report. See, there are a lot of key details that was left out of the video, right? So we don't really know what went on in that transaction between the listing agent and the buyer's agent and the conversation that she had going back and forth in the negotiations. Was there money allocated toward these things to have them fixed, or were these things requested to be fixed prior to closing in the inspection report when due diligence was taking place? Because in the due diligence period is when all of these things could have been addressed. I don't know what state she's in, so I don't know if they have due diligence, but they should have a period of time where all these things can be addressed. Okay. So I just want to forewarn people that are getting, apprehensive or nervous about these scenarios because sometimes people don't properly give you all the missing information. So a lot of people can be very nervous about purchasing a home, especially if they're hearing stories like this that could make them feel kind of nervous and scared. There are ways to actually handle these scenarios, okay? Because no house is going to be perfect, especially if it's an older home. I'm not saying that she has an older home. I don't know what year home she has. And I don't know the upkeep or the maintenance of the prior owners. It's just like a car. You don't always know what people have done, right? Unless they provide you with documents on things that they have maintained. And that can actually be requested by the buyer's agent from the listing agent if any of these things have been maintenance, serviced, or if there are warranties in place to cover them, or if there have been some type of upgrade or upkeep of these items here. Okay. So I wanted to go over that. Home warranty is very key, especially if you are purchasing a pre-built home, you all. I would say anywhere if the home is between 5 years and up, 5 to 10 years, you want to go ahead and definitely secure a home warranty on that property, right? Even if it's a new construction, you can still, if you would like to secure a home warranty, things happen, all right? Nothing is ever guaranteed. Even a brand new car, there can be issues with that. Let's keep going, you all, because I wanted to review a little bit more of her video. I don't want to get too caught up in the video, but I just thought that was important to address a few of those scenarios with you. So let me see if I can find what else she's talking about here. Okay, so just a moment. All right, so there she is. Let me find where I am. Did they log me out again, y'all? I think this thing is logging me back out. Hold on, y'all. Want to make sure I am still showing up on the screen here. Okay, here I am. Here I am. Here I am. All right, let me close this. All right. All right. Just a second. Let's continue. Okay, I'm going to go ahead and play.
And I went to look at an apartment that she was really excited about because it's pretty close to me as well. So I was like, let me go look. I volunteered to do it because I like looking at properties. I think my second job would have been a realtor as well. I like looking at properties and sharing properties. So I went over to the apartment complex and I met this really nice lady named Danielle, and she showed me around. First impressions of driving up was, yeah, this is nice. It's quiet. It was a weekend on a Saturday on a beautiful day, so it wasn't like kids wouldn't be out running around having a good time. I didn't get any of those vibes. They also had like a clubhouse or room like that. So we walk in, there's a lounge area, and she walks me around and shows me that there's a coffee bar that's accessible to everyone. All the students, all the people have access to this coffee bar. I don't know why I said students. All the residents, all the people have access to the coffee bar. We move along, and she's showing me that there is like, if you work from home, there's like a conference room area where a lot of work.
All right, long story short, all of these amenities really don't really matter. I think she's getting caught up in the finishes and the, aesthetics of all of this, but really, that has no bearing on what's going on with her house. So let's get past some of this, okay?
Cut, which I really like. This one is kind of in the cut too. Anyone
All right, she's talking about the location. Let's keep going.
goes, okay, all of this money that I spend in my house on maintenance just have to work on a $6,800 bill, pretty much 7,000 with the rest of the bill. Over 7,000 for a new AC unit. I've had to pay money for.
All right, let's stop right there, okay, about the AC unit, because I know someone that's going through this right now. With the AC unit, that is something that's listed on the RPO's Residential Property Owners Disclosure Statement. And they do ask, what year is the AC unit? Now, they're supposed to put the year, okay? And it is up to the buyer's agent to do their due diligence to research this information so that they can properly inform their client. Do you know that this AC unit is X, Y, and Z years old? This could be a potential issue in the future. What would we like to do about this? And that can be actually brought up in the negotiation process as well. It is up to the sellers. They can say yes and they can say no, whether or not they want to make any adjustments for the buyer, right? Because in North Carolina, this is an as is state, meaning they can sell the home as is and they don't have to make any repairs to the home. They're not obligated to do such. So, if these are going to be financial burdens or issues to the client, then the realtor can kindly suggest to that client, hey, maybe we want to look at other properties and move on, especially if we feel that this could be a financial burden for you in the future. It is then up to that client to say whether or not they would like to keep moving on and looking at other properties, or do they want to move forward with making an offer on this property and making it to the closing table. So you see how a lot of things are left out of the scenario that we're not privy to, right? So I'm going over this just so you can understand how a transaction should go, a proper transaction for a realtor that's advocating for you. And I'm not saying that her realtor did not advocate for her, but I'm just pointing things out as we go so that anybody that is a first-time home buyer can be abreast on what to look out for and watch out for. All right, let's continue on, you all, and listen to what else she had to say. All right, just a moment.
For a new hot water heater. I just bought an $1,100 fridge. We're talking about $10,000 here, right? That to me is mind blowing after sitting and thinking about it. Whereas if something goes wrong with an apartment, I call maintenance and they come fix it and it's their problem. So let's move on in because you're going to get like a tour of the apartment while I talk through my thoughts on it. So I hope you're enjoying.
Just please understand that home ownership is a mindset, everyone. You're not going to have the maintenance people to come every time something goes awry. You need to have a local handyman on your team. And you need to be, I don't know if you need to go on Facebook, neighborhood next door, get some recommendations, call around, ask a neighbor, ask a friend, call colleagues, co-workers. Who do you know? Who is a good handyman? They are lurking around, okay? So just have a few of them in your phone for contacts in case something would happen or would go on. You can even ask your realtor, do they know some people? Because realtors always have somebody in their contacts that they could refer to you in case something goes on with your house. So I just want to point that out as well. Let's keep going.
This video. If you are, don't forget to hit the like button and subscribe. So we move out of the common area
Make sure y'all hit the like video as well.
or the clubhouse area, and we move into a little cart. They got a cute little golf cart for her, and there's no gate. There's no gate here
All
either.
right, we're not concerned about this, okay? We're not concerned. We need to get into,
The tiling in the back,
she's talking about the aesthetics, okay? We're over that. Let's keep going.
which is another
Let's keep going, y'all. Pros and cons. Let's
organization
listen.
where I can decorate how I want, the personalization, and of course, in my particular case, the natural light. And
So she's talking about aesthetics. Let's keep going. Let's keep going. Let's keep going.
it has its own set of rules, just like in my house, I have HOA. So,
All right, let's keep going.
and then I paid, let's
The financial breakdown is what I'm getting at. So let's hear this part.
talk money. Of course, we're a budgeting channel, finance, so we're gonna have to talk about the money. I've got my handy dandy calculator right here with me, and my mortgage, we're gonna just call it, it's 1308.27. We're just gonna call it 1310 for now. All right, for now, literally, because it keeps going up.
Okay,
When I first moved, I think it was like 1085.
okay.
Okay, so
Let's stop right there because she glazed over that real fast. Okay. 1085 to 1310. So 10, hold on, my marker's not working, y'all. 1085 is her mortgage payment, which is not bad actually. That is less than a lot of people's rent. I didn't see when this video was uploaded. Let me see if I can find when this video may have been uploaded, y'all. Hold on one second. Let me see. Let's see, where's the video? Because I know a lot of people are paying way more than that for rent right now. So just a second. Oh, it says 2 weeks ago. So she's paying from 1085 to 1310 is what she said. Okay. 1310 is still a lot less than what people are paying in rent. All right. Should I sell my house for an apartment? Now, I think she's in a townhome, if I'm not mistaken. Okay, so she probably does have HOA, especially if she's in a townhome community. Just understand that anytime you're in a townhome, you are going to have an HOA. If you have a condo, you're going to have an HOA. And if you're new in a new subdivision, a lot of those have HOAs as well. Okay, homeowners association fees, and we spoke about that on the last live stream. If you didn't get a chance to check it out, please go back and review the videos, y'all. Okay. All right. So she said from 1085 to 1310. So why did the mortgage increase? She didn't speak about that. Depending on the type of financing you have, and I'm not saying she did this, but if she had what's called an adjustable rate mortgage, and they call it ARMS, right? She really should have gotten a fixed rate mortgage, right? If she had a fixed rate mortgage, that's one thing. But if she got an adjustable rate mortgage, that means that mortgage goes up, right? It adjusts with the market rate. So that means your mortgage payment can go up and your mortgage payment can go down. It fluctuates with the market. So a lot of people don't like to get the arms because it is unpredictable and they might not have the financial spending power to adjust to the adjustable rate mortgages. This is what caused the mortgage housing crisis back in 2008 going into 2009 when a lot of people went under foreclosure, you all. I spoke about that on my prior video as well when we talked about financing, right, and securing loans. I still need to review the USDA loan as well as getting more in depth to the VA loans because I do want to talk to my veterans out there. And if you are a veteran, please reach out to your real estate queen. That is 980-428-2333. Why am I saying that? Why am I shouting out to the veterans? Because I am the daughter of a veteran, okay? My prior client that was a veteran had a very successful closing, okay, with the lender and actually got money back at the closing table. All right. So we want to make sure we treat our veterans well around here. So please get in contact with your real estate queen so we can go ahead and put you on our team and make you a homeowner. Another reason why her mortgage could have gone up is because of property, what is it called? Real estate tax, right? Real estate tax are based on the tax assessments on your property every so many years, right? In the state of North Carolina, this is done every so many years. So every state has their own assessments. When your property taxes go up on your house, meaning your real estate taxes go up, that means your equity and the value in your home goes up. So instead of your home being only worth, let's say, $350,000, it might now be worth $400,000. So that means the tax increases on that property. All right. This is a good thing because if it goes down, then you lose value, you lose equity. We don't want that. I remember when the housing crisis took place, a lot of people were almost upside down or just breaking even for people that wanted to sell. And I remember specifically one of my coworkers saying that she had purchased a townhome and she wanted to sell it, but she would only be breaking even if she sold it. So she was not gaining any money out of it, you all. All right. So hopefully that kind of explains that. Another thing, too, that can make your mortgage payment go down, and I've spoken about this on a prior video, is your escrow account. Okay. You do have something called escrow, and it holds the funds for when you make your mortgage payment. When you make your mortgage payment, they divvy up the payment to principal, interest, and taxes. Okay. If you have a shortage in the escrow account at the end of that year, that tax year, you will receive a statement from your mortgage company letting you know how much needs to be put back into that escrow account. If you do not put the money into the escrow account, your mortgage payment will and can increase. To lower that, you can actually pay into the escrow account to bring the mortgage payment down. I don't know if anybody has ever explained that, but you can do that, okay? And if you don't understand how that works, please reach out to your mortgage company. They will have someone to walk you through how that process works, okay? All right. So these are reasons why her mortgage payment could have gone from 1085 to 1310, okay? And actually, let's do some calculations on that because I don't know how long she's been in her house. But, she probably does have equity in there if she's been in there long enough. So she has a price difference of $225. So she went from 1085 to 1310. So basically, that's an extra $225 a month. Now, let's be honest with ourselves, ladies and gentlemen. A lot of people spend $225 like it's nothing, okay? Like it's nothing. And let's just be honest. A lot of things are very, very unnecessary, and y'all know what I'm talking about. I don't even want to get into it. So let's keep going. Let's hear what else she's saying, okay? Because we want to get into the financial aspect of it all. All right, I'm gonna share my screen and let's play this video and let's hear what she has to say.
So 1310, if I did it and then I paid, let's say $40 for Zumba, and I pay, now I'll tell you in a minute why these are important. I pay about $86 for internet, and I pay $33 per quarter. So really, every month that's looking like maybe 11.50. Let's just call it 12. $12. Is that even right? 10, 20, 30. Yeah, let's just call it $12 for trash. And I don't really pay anything for laundry. Okay. So overall, we're looking at about 14.48 for those specific things. And the reason why I'm telling you those specific things is because in this particular apartment, this is the breakdown in charges. Now, their prices vary here and there, depending on the day, she said. But when the day that I went, was the pricing. Deposit is anywhere from $350 to $2,000 depending on your credit. Application fee $50 per applicant. Administration fee $150 per apartment. Canine pet fee $350 for one dog, $550 for two dogs. So this is a pet friendly. Feline pet fee $350 for one cat, $550 for two cats. Monthly rent per rent. So you pay those fees to put your animals there, but then you also have to pay a monthly fee for your pet of $20 per month per pet. Up to three pets allowed if all under 25 pounds. I don't got no pets, so I don't have to worry about that. Okay, so there is a valet trash fee. This is why I added my trash of $25 per month. Okay, mine breaks down to like $10 a month. It is on a promo, but still. Washer and dryer, $50 per month. My washer and dryer already here. Okay, I bought it and I might use that getting detergent. Okay, and then technology fee, which is $115 per month, which is basically their internet. All of these are mandatory, by the way.
Mm.
Okay, so let's talk about if you were to move in on the very first day of the month, here is what you'd have to pay. The base rent on that day. So that's just this day. It could have changed. Actually, my friend Lauren says she saw one for 13 something base rent, but it was on third floor, which is like perfect for me because I like the third floor. I don't like it to carry groceries, but I don't mind the third floor. So here it goes. 1527 is the base amount. The risk waiver of $9.95. I don't freaking know why that's monthly. Technology fee of $115. Valet trash of $25. Washer and dryer of $50 for a total of $1,726.95. So the apartment would cost me 17, let's just call it 1750 or 1725. And the house with all those things that I mentioned would be like 1450. So 1725 minus
375.
1450. We're looking at coming up with an additional $275 a month to avoid
275.
maintenance in future.
275.
If you were me, would you consider selling your house? Now that was just one example of an apartment, but that's a
Okay, let's stop right there. Okay. So basically, if she got this particular house, she's looking at a difference. I was off. She was right. She's looking at a difference of about $300. Now, personally, for me, that apartment is probably less space. Okay. She does not have a garage. She does not have a driveway. She's going to be walking to the third floor. She just told you she likes the third floor. She's going to have somebody under her, on each side of her, all around her. So she's going to lose any yard space, any privacy when it comes to that. But that's her choice. Now, I just think that it makes no sense to pay an additional $300 to go from a house to an apartment where you're not acquiring any equity, right? You're actually at that point losing money because remember, I told you, always remember when you pay your mortgage, it's like putting money into an invisible bank account that grows exponentially, right? When you pay this rent, which is 1727, let's get the calculator. What if she signs a year lease? Okay. You know, the longer your lease, the more they will work with you. So she's going to give them 20,000, so 720 foot. So $21,000 is what she'll give them for a year. She won't be getting that in equity. Now, if she were to make her mortgage payments, which her mortgage payment she said is 1310 times 12, she'll be paying 15,720. That now that's just on the mortgage payment. That doesn't include all this other stuff because she said the tech fee, the valet trash, all of these fees that she was telling us, is necessary in your house. You don't have to pay for the tech fee if you don't want to, right? You don't have to pay for valet and trash. Usually that's already included. Like I know for here in Charlotte, the trash, some type of way, we don't pay that. But it's probably implemented in like our taxes for, the house that we live in, right? This Let's talk about the security deposit for a second, because if people are coming up with this type of money for a security deposit and application fees and administration fee, she said that's anywhere between $350 to $2,000. If you got $2,000 and then you come up with a $50 per applicant application fee and a $150 administration fee, so this could be upwards of $2,300. That is almost a down payment on a house. Okay. That's not even including like moving expenses. That's not including the pet fee that she told y'all about, because in your own house, you don't have a pet fee. You can have the pets that you want of your liking to your choice, as long as they're not viciously going outside and attacking neighbors, right? Washer and dryer, $50 a month. So I guess you could move your own washer and dryer in there if it's one of those ones that have like the full size washer and dryer. If you bring your own, that's what I did when I was in an apartment. I brought my own and I didn't have to worry about renting from them, right? Because it was mine. But say you don't, then you will be paying an extra $50 a month for the washer and dryer, which to me makes no sense. Now, unless it's stackable, most people, I don't know if you want to buy a stackable washer and dryer, you could, you could do that. But, to charge for this, to me, it's ridiculous. But apartments do what they want. And then she said there's some type of $9.95 I forgot what type of fee this is. I don't know if it's like a security fee or something she named. So she said that's monthly and that is required as well. So, what are your thoughts and opinions on this? And my thoughts and opinions would be purchase a home warranty so that she can stop having issues that she's complaining about on this list and get these things covered and fixed. That would be my solution to the issue, to have these things tended to, instead of moving, right? Is going to require moving expenses. You got to pay to get a U-Haul truck. You got to pay the moving company. You might have to get a storage. It's just to me inconvenient. But if she's on the verge of wanting to move out, I don't know how long she's been in her house, something went awry somewhere, right? And like I said, we don't want people having buyer's remorse out here. That's why I'm doing these live streams. Now let's get into, all right, we talked about home warranty. Let's get into homeowners insurance. Homeowners insurance. All right. Homeowners insurance, again, is if your house undergoes like a certain peril or a disaster, as a fire, hurricane, tornado, something to that effect, wind damage, hail damage, things that, are the elements of nature, something cause your house to have damage done to it. That's what homeowners insurance is, okay? And you have to read your policy because there are certain stipulations in that policy that tells you what covers what. Homeowners insurance also, you all, because I used to do auto insurance claims, covers, okay, if there's theft in your house, somebody breaks in your house, they steal items out of your house. You know how the leasing department, the leasing the agencies and these companies tell you before you move in, you need to have renter's insurance. So the same thing with the house. The house covers like theft, okay? Someone came in, they broke in my house, they stole, they took this, and that. Homeowners insurance, okay? That's who you call for that. Even if they break into your car and say you had something of value in the car, you don't call your auto insurance company for that. You call your homeowner's insurance for that. A lot of people are not aware of that, but that's how that works. Now, keep in mind, if you file a claim on your homeowner's insurance, you have to reach a deductible, okay? That could be a $1,000 deductible. So if this item that was damaged or taken did not meet your $1,000 deductible, you might not get any money for it. But if it is over your $1,000 deductible, they're going to pay you less the $1,000 deductible. It's just like an insurance claim. You have, oh, the windshield cracked or whatever. You need to replace the windshield. What is my deductible? In the state of Florida, there is no deductible for the windshield, but in other states, there is. So your deductible could be $250. If the windshield costs $500 to replace, you'll get a check from the insurance company less or minus your $250 deductible. That's how this works. Okay. So I just want to make sure people understand how homeowners insurance works. Why do you have it? You have to have it if you are financing the house because, like I told you, the lender is going to require this because they are lending you the money and they have a financial investment in the property until you pay it off. Same thing with the car. This is why the loan or the lending or the finance company requires you to have automobile insurance before you drive off the lot because they're loaning you money for the vehicle that they have a financial interest in. Let's get into mortgage insurance, which is different from life insurance. It is different from homeowners insurance. Mortgage insurance is not the same as homeowners insurance, all right? Mortgage insurance, because I heard somebody tell me this. Do you have life insurance? I said, yes. I said, I also have mortgage insurance. They said, same thing. No, it's not. Okay. It's similar, but it's not. Life insurance covers you, the individual. Mortgage insurance also covers you, the individual, but it pays off your mortgage. Okay. And there are different tiers of mortgage insurance that you can obtain. All right. You can get mortgage insurance that will pay off your entire house. Keep in mind that premium is going to be higher because they're paying more money for you. You can also have mortgage insurance that will pay off 80% of the home value or 40% or something to, it's three different tiers. Okay. How do I know? Because I acquired mortgage insurance when I got my house. So it's three different tiers, three different categories, and you pick and choose which one you want. Whatever one you choose, the less you pay, the less they pay. The more you pay, the more the insurance pays. This happens, how they pay is like, say you get injured or sick or a fatality happens, they pay the mortgage off for you up to whatever percentage of mortgage insurance you purchase, okay? So, if anything happens, at least your family and relatives don't have to worry about trying to pay this mortgage bill for you. All right. Or have to worry about selling the home. Now, you've secured a property for your heirs, okay, or for your future generation or whomever. This is why mortgage insurance is very important. And then I would strongly suggest, because I don't think you could be overinsured in this aspect, outside of mortgage insurance, I would also recommend to have life insurance, you all. And if you have not told your family members, relatives, or whomever who your insurance carriers are, please make sure someone is aware of it. Please make sure someone knows where to find these items, how to get in contact with you. Have it somewhere so people know. Because a lot of times people have unclaimed funds sitting somewhere because nobody communicated, nobody talked about it, nobody knew anything. Right now, there could be policies out there. Nobody can claim it because nobody talked about it. It was all kept in secret. What good is it doing the family members and relatives if nobody knew you had this? You never told them the policy, who the beneficiaries are, how to go about contacting these, institutions. Nobody knows. And on top of that, please get a beneficiary for your bank accounts. All right. Um, Even on your job, people think that, oh, I have a life insurance on my job. What happens if you lose the job? What happens if you get laid off? If you leave that job? What happens? You are no longer covered. That's what happens. This is why you need to get life insurance outside of your regular job. These are just financial things that I am trying to educate you on because I find that a multitude of people, especially in the certain community that has been systematically oppressed and disenfranchised and redlined and blockbusted and steering. All these things have happened, and we didn't have the Housing Act enacted for us until 1968, which was only 57 years ago. This is why I'm having these live streams to educate, right? So that we make better sound decisions for ourselves. So if something happens, we are covered. Home warranty. Okay. What is a home warranty? We just went over that. Homeowners insurance. We just went over that. It's required. And then mortgage insurance is not required, but highly recommended. Life insurance is not required, but highly recommended because we know that GoFundMe is not a life insurance policy. We know that GoFundMe is not guaranteed. All right. Nobody should be scrounging up funds for a GoFundMe every time people need a life insurance policy, right? Life insurance policy should definitely be paid every single quarter, month, semi-annually, or however you have it set up. Please don't say I can't afford to not pay these things. You cannot afford not to have it. When people say I can't afford to save, you cannot afford not to save in some capacity. Please, and I also want to say I'm not a financial advisor, but if you can put money into a 401k account, do it, especially if your company is matching it. Also, if your company has stock, please start investing in some form of capacity into that. And then also, if you have a way to set up an IRA. If you are self-employed, please invest into that. And if you have to go outside of a job and do your own investing, you can also you purchase your own stocks through E-Trade. There's Stash. I know some people talked about Acorn. I don't do Acorn, but there are different ones out there. And I'm also going to heavily stress to get oh, it's an index fund, you all. Let me write that down because I was actually telling my sister about this, the index fund. So Vanguard is one that holds this, and then also Fidelity. Look these up because these things are going to help set you up for your future. And what shirt do I have on today? T Gresh Realty. It says, "Be the CEO of your financial future, y'all." How are we going to be CEOs creating economic ownership out here and we're not bossing up? We're not homeowners. We don't own businesses. We don't have something outside of a regular W-2 job, right? We don't have anything to fall back on if the job goes away. We don't have any say so over our place of residency because we're always tenants and we have a landlord, right? So we need to boss up. We don't have home warranties. We don't have homeowners insurance. We don't have mortgage insurance. Well, you're going to have homeowners insurance if you have a mortgage payment. I mean, we don't have life insurance. Come on, what are we doing? What are we doing? People are spending money on cell phones. People are getting the latest gadgets. People are buying the latest Jordans. People are spending uh, hundreds of dollars on hair, which is unnecessary, nails. They are making it their duty to have lashes, getting your brows done, all these aesthetics, right? But when it comes down to really what's going to help you financially, I'm telling you right here, this is what's going to help you, okay? It builds and it's going to grow over time. And if you have like I said, a retirement fund, a 403(b) if you work for the state, especially if you work in the school system. I used to work for a retirement company, okay? And so please invest into these things. 401k, 403(b), IRA. If you don't have any of it, check with your financial institution and get one established, okay? You owe this to yourself. You owe this to yourself to set yourself up for your financial future, for if you have children, relatives, family members, whomever, but especially for yourself. If you love yourself, this is what you'll do for yourself, you all. And I just felt like this was a very important live stream to have so that people can really understand the basics and the ramifications of not understanding what's going on with the home purchase, you all. If you have questions, Please feel free to reach out to me. Write it in the comment section. Please like, share, subscribe to this channel and this video. We'll have more of these on Wednesdays. My apologies for starting late, but I got in late. Usually we'll start at 7 p.m. on Wednesday. If there's any particular topics you want me to touch on, feel free. You know how to reach me, y'all. I have a multitude of ways to reach me. You know, I have Instagram, TikTok, Facebook, YouTube. Y'all have my email address. I gave you my phone number. What more do you want from me? I feel like Tyrese at this point. All right, y'all. Y'all, that is about it. I am actually getting hungry. So this lady could actually pay $15,720 versus what did I say? 17, let me see, 1727 times 12. 15,000 versus basically 21,000. So you tell me, which one would you do? Which one would you do? Do you want to keep the house? Do you want to keep the townhome, or you want to give it up and go into that apartment for a year and give them $21,000? You want to give away the 21,000, or do you want to keep building equity? Which one is it? Because she's talking about she had to pay a $7,000 bill. This is why I went over the home warranty. That's why I went over that. I don't know if her home warranty expired and she did not renew it. So that's another thing we need to think about. You need to be looking into your paperwork. Okay, how long was the warranty for? Was it just for that 1 year? Was this something that was gifted to her by the seller and she negated to read the paperwork? Did she not understand that after that year's coverage, she would have to obtain her own home warranty? Because she's saying in the comment section that the lender gifted her that home warranty. I've never heard of a lender doing that, so I could be mistaken because I was not involved in that transaction. But somewhere, somehow, I feel like there was some misinformation or misunderstanding going on with this situation and with this transaction. That's just my take on it. I could be wrong, okay? Somebody could have perfectly advised her on all these things that I'm going over with you, but you should not be in your home and you're saying within 1 to 3 months within the year all these things happen and you're thinking about moving out and getting into an apartment. That sounds like buyer's remorse. All right. And we don't want that. We don't want that for people that are building generational wealth. Building generational wealth is not just being in the home, it's maintaining the home, it's maintaining an asset, it's actually maintaining an investment. A home is an investment, so you have to invest into your investment. Just like they say, your body is your temple, you have to think about the things you put in your body, think about how you treat your body. Like people, they think about what type of gas they put in their car. If your car takes premium gas, are you going to go around and put regular gas? Like Kevin Hart said, you're going to put some regular gas in this bit. You know, your engine is going to be knocking. So the same thing if you don't maintain your house or your home. All right? So anyway, I hope that helps. I hope that helps, add some clarity and give some context to a lot of these scenarios that I keep hearing on social media. If you have any videos that you want me to look over or touch bases with, please feel free to send them my way. There are a lot of, misconceptions going on out here, and that's why we are having these conversations because home ownership should be normalized. Renting is should not be the norm for a lot of people, especially when we have been systematically disenfranchised in the Housing Act up until 1968. There's a reason for that. And we went over the redlining video last time, and we went over the redlining, block busting, and steering on the prior video. If you didn't watch it, please check it out to see why we were not able to actually practice real estate or actually partake in real estate back then. All right, there was a reason for it. All right. So anytime they try to keep us out of the scenario, please think about why, because it empowers you. And you cannot empower yourself if you are not empowering your finances, you all right? The finances are always under attack. That's why we must educate ourselves. Just like the teachers go out here and educate the children. All right. We have to educate ourselves amongst one another. I am your real estate queen. This has been an episode with yours truly, T. Gresh Realty. Remember to continue to be the CEO of your financial future. Create economic ownership, you all. I am signing out. Until next time, you all stay blessed. And please tune in to next Wednesday. Hopefully, I can be on here by 7 p.m. But if not, go back and watch the replay, y'all. Okay, signing out.